The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. This is Mr. Billy Ray Valentine, a.k.a. Larry Pesavento from Tucson, Arizona, with two frogs in his throat. And I am trying to get rid of both of them, but it's a little difficult. Anyway, we're going to start looking at the DAX. As you can see here on the daily, it's been up here for about 6 or 7 days, hasn't gone anywhere. And if we take a look at this on a little bit smaller time frame, where we're watching the the 15-minute chart, you'll see that's just basically been in a slight downtrend with a double bottom that occurred this morning. And so it's still nothing much is really happening yet, but we think we're going to start to see some increased volatility. Folks, I think that the best thing to look at for today is, if you remember, the last time I was on, which was Tuesday, we were looking for a potential bottom to come in here in the Treasury bonds. And we went down and we hit that number spot on. The low was 150.14. That matched the low that we had way back in May. And if you'll remember, that was a 61% retracement on the longer-term daily chart too. So that's a really important number in the Treasury bonds. Pay very, very close attention to that, and you'll be able to. You'll see it, I think, if you look at it a little bit closer. I believe, yes, I do have it here. I do have it here on the Treasury notes. You'll be able to see it was the same type of pattern that we made in the notes right at the 61% retracement. They also had a pretty nice rally. So we're right in that zone where we could get a pretty good rally. And, of course, we have Mario Draghi speaking right now, talking about the euro. We'll cover the euro in just a little bit. But anyway, watch this, because we get below 150. We're looking at 147 in those bonds. And the thing that you want to watch here in the bonds is to watch how it rallies over the next 3 to 5 days if we get this rally. The main thing is we need to watch to see if it's going to have either a 382 or a 61% retracement. This will be a big indicator as to telling us what we're looking at. Pattern recognition is a leading indicator. It's not a lagging indicator, and it's far from perfect, but it does lead the market. There's no question about that. Those of you that really have a hard time believing it, you should take a look at Dr. Andrew Lowe's book, The Non-Random Walk Down Wall Street, that he published in 2002, where he takes all of these formulas and proves that mathematically they are correct, and the fact that they do lead the market. And those were the two things that came out of that book that were so important, that the markets repeat over and over again. And this repetition is predictable within limits, and that's what it's really all about. So pay particular attention to that, as we're looking at some of these things. Now, over the past 1 second, please. Over the past few days here, we've been watching this gold market with a great deal of anticipation. And I want to bring up this chart to show you what we're watching. You'll see here that we were looking for the possibility for the market to come down to this 1268 level. We've been to 1272 so far. We did take out the lows of October 23rd, held it so far, but I still believe you got to give it a little bit of respect and think that it's still going to have a chance to get there. That's what it looks like to me. And also remember, there's also this possibility. Sorry. If we'll take a look here at the 4-hour chart here on the gold, you'll also see that we have three major ABCs down here near this 1260 level, 1255. and that would really be the place where you'd get a washout. Another $20 lower in the gold would make it really interesting, to be a place to be a buyer down in there. But believe me, folks, this gold chart and this silver chart and this platinum chart, these don't look bullish anymore. I mean, they've broken down. They're coming down like they should, and they're holding support at certain levels, of course. But frankly, you have to give it a little bit of respect here, because it's going to be really interesting to see if it's going to do it. Now, remember, the euro and the gold have been going hand in hand, for quite some time, and we'll switch over here. 1 second, please. Now I have 3 frogs in my throat. Okay, let's take a look here at the euro. This is one that we've been watching for quite some time, like every day. That's my favorite trading vehicle of all time. It's been very good to us this morning. Hold on 1 second. We'll get this up here and take a look at it. You'll notice that we made that 78% retracement last night. Actually was right after the London, not too much after the London Open. We went up to that 118.20.35 level, hit it spot on, and then it's now it's come down where it looks like we're heading to that 117 level. And if you'll notice, you're going to have a beautiful ABCD pattern there, and you're going to be sitting right at a 78% level. So far, the euro has been at 117.40. We're trading at 117.72 right now. So my guess is that we're probably getting close to come down to this level. Now, we're on a Thursday here. My guess is it probably ain't going to happen till Monday, but that's just a guess, and guesses don't get you anywhere. So watch it. It's going to be very, very interesting what the euro does here at this 117 level. That's down about 70 pips from where we are right now. So I would certainly wait and see. What we just did is we just made well, we're down 100 pips from the high last night, but we have broken below the 78% level from the previous day's low on the 23rd. That really is telling you, from a technical perspective, that this thing has a really good probability of making. Now, we had a little bit of a rally here this morning, and the rally's not very much. It rallied, did 50 pips. That's a pretty good rally. But if we get above if the euro gets above the this 118.30 level one more time, then I would say maybe this pattern is already completed and it's missed the target. But the thing is set up so beautifully. I have to respect the fact that I think it's going to get there. That's the bottom line of what I'm looking at. So I just don't see any reason to go long the euro here or long the gold until we get one more washout, and then I would certainly, and I happen to be short both, so I would hope that, well, let's don't use hope. Hope is not a very good trading word. That's absolutely for sure. Let me get a drink of cold water here, folks. Okay, now, we've had a question about the live cattle market, and I don't usually talk about live cattle here, but since one of our folks would like to talk about it, we're going to take a look here. We'll take a break here and we'll come back with live cattle. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we're talking a little bit about the cattle market. I've posted 3 charts of the cattle, December cattle of 2 days ago, then the updated as of yesterday, and then I've also put in the feeders. The feeders I haven't traded in, oh my gosh, 15 years. They're rather thin market, but the professionals are certainly in there. It's almost 100% professional market with the exception of the few hedge funds that trade it. But live cattle, a lot of people trade that. That's still very active. And they do a pretty good job, even though it's a much, much smaller market than most. But they still follow the technical patterns. If you look at this December cattle, you'll notice that up in this 120 level, which completed 3 ABCD patterns and almost a double top. And then also you have a hanging man candle. It makes it real interesting to see how things are, really holding on up here. Anyway, if I had a real interesting conversation with my good friend John Jameson the last couple of days on looking at some of these patterns that we're watching, and he had a really interesting idea regarding on how the market moves in the opening price, and it has a tremendous, really tremendous advantage, especially in really strong trending markets. And it's really amazing the statistics behind this stuff. So please, when I give you some of this information, try to look at it yourself to see how it really works. The bottom line is this. This is from my good friend John Hill when we first started looking at this way back in it was in the 78. So I was at Drexel at the time, and his son John Jr. was at Duke University. And that's where we were we were using his computer power to look at the opening price, and then Toby Cable he and John Jr. and Toby Crable came out with a book. It was Toby Crable's book, The Opening Price book, and then they started a hedge fund that they ran for many, many years. Crable still runs it, but John Jr. is out on his own doing his own hedge fund right now. However, what you want to do is if you're above the opening price and you're long, you have a good chance of that trade working. But if you're below the opening price and you're long, the odds of you winning on that trade have been reduced by about 60%. So just test it yourself. If you're in a trade and you have a question, say, why should I get out of this or not? And then just look at the opening price. If you're below the opening and you're long, you should get out. And if you're above the opening and you're short, you should get out. That's basically the bottom line. Amos Hofstadter had a little plastic plaque on his Reuters machine that said, has your position changed in the last 3 days? And the second thing was, is there a reason for you to exit the trade now? And then there was a little sub thing, says, if you can answer no to both of these questions, you have to stay in the position. So that's one of the things that you want to try to do. I'm rambling a little bit. I'm sorry, but I'm trying to put all these thoughts together. But the thing that I watch is that opening price, because if you're below the opening price and you're long, you got problems. And if you're above the opening price and you're short, you have problems. And you can save that. You can solve that problem by just putting in a stop. These markets have a tendency to run like heck. No question about it. So anyway, that's my 2 cents worth for what it's worth, and we'll move on to the next one to talk about it. Folks, the question that someone just asked is, I'll try to say it again. I'm waiting for gold to get down to that 12, to break 1270 and see if it gets there. It might not, but and I'm also waiting for the euro at the 117 level. That's another 70 pips from where we are right now. I know Draghi was speaking this morning, and that broke the market 100 pips, but frankly, that's not a big deal for Draghi anymore. Okay, the next question that we've had from one of our listeners is about the old slippery slope crude oil. We'll put this up here and take a look at it, and we'll get this up here right away. And you'll see here, there we are. Here again, it looks like we're getting ready to attempt a double top up here at this $53 a barrel level. We're trading a little bit below that this morning. I think we're up slightly in crude oil. I haven't double checked it exactly, but I think we're getting up there. Where are we? I know we're still at 52.12. We needed to get up about another 80 pips to see if it's going to hold that level, and then we'll have a better idea of what it's going to do into this level at 53. That's really strong resistance up there at 53, folks, and that's the same thing that we had in the heating oil. If you look at the chart that was posted by Matt, you'll see that he's did a great job with all of them, with gasoline and crude oil and the heating oil. They all line up really nicely, so keep an eye on that. Regarding short-term patterns, folks, these markets, just to give you an example, gold went today in the last couple hours, it dropped $1,000. It went from 1284 to 1270 to 1274. Then it rallied right up to the 61% retracement at 1281. That's a $1,700 swing, folks, in an hour. We haven't seen a $1,700 swing in E-mini since Hector was a pup. So, these markets are acting pretty good on, outside of what the stock indices are doing. So that's one of the reasons why, if you look at some of these things like gold and crude oil and euros and stuff, they give you some better opportunities than just, looking at stocks. But we're getting a little bit of information in stocks. Yesterday, by the way, the bottom that we made in the S&P and also in the E-mini NASDAQ, both of those took out the previous day's lows by just a couple of ticks, and then, of course, they had these huge rallies, and the reason they did that is we had a huge ABCD pattern over the last 3 days in the NASDAQ that measured to 61.20, and the low was 61.15, and then it rallied all the way up to 60.80. So those are just some of the, the shorter term things that we're looking at as we speak here now. So I had an email from someone and then they asked me the question, is the top of the stock market in? And I sent them, I says, I will answer this in a month. So I don't know. All I know is that we've had some divergence here, but the overall picture of the market is, from my perspective, technically could not be more bearish. There is just absolutely no reason why I would even think about buying stocks in here, but that's my opinion. Doesn't mean very much. I'll have to wait and see here. Okay, I just wanted to resend this here on the bonds to show you the importance of this bond pattern that we're looking at. You'll notice that we had this beautiful ABCD. It went right to the exact point yesterday, folks, at 150.14. We rallied a full candle already from the bottom, and now we're testing it. I would watch for a little retracement here in bonds because it's got a pretty good chance to rally. We're down 10 days from the high that we made way back on the 10th of October. So we've got a good chance for the bonds to rally. And if the stocks sell off, there's always that possibility that they could have a little bit of a rally. So we'll see.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the chart of that NASDAQ that we were just discussing. As you can see, it had a pretty big down move on a relative basis. Yesterday, we dropped over 50 points, which is quite a bit. Actually, a little more than that from high to low, but it did stop, right where it should have. There's a perfect ABCD pattern, as you can see there, and then the market has rallied back, and it's made 3 lower highs on the shorter-term time frame. So until we break out those shorter-term highs, the bias would be to the downside. I have a little personal story to tell you. As most of you know here, I've talked about, my kids and I were really involved with the Dodgers back in the 70s and 80s, and my kids are 48 and 49 now, and they still watch the Dodgers when they're playing in the playoffs in the World Series, because we used to go to all those games, and they really have a wonderful memories of it. But we have a caller. Someone's made their $10 for the day. One of our good friends from Washington. Marshall, how are you?
I'm pretty good, Larry. How are you this morning?
I'm above ground, staying away from open graves, my friend. What can I do for you?
A couple of things. On the this opening price thing, do you consider 3 p.m. the opening, or do you? Or I guess it's actually 6 p.m. But do you consider the afternoon open, or do you consider the 9:30 open?
I use a 9:30 open, and the reason why, Marshall, I'm assuming that there's only about 15% of the people that are crazy like we are, that trade all night long and stuff. So my guess is they're looking at the opening like any other place. But I use it pretty much as a guideline. So 9:30 is the opening, and as you notice that when you see the 9:30 opening price, there's a lot of volatility around that time, isn't there?
Yeah,
so
that's true.
That's another reason, that that we're looking at that. That's the main things.
And does that apply to all markets, or just?
Yeah, it does. It does. When I wrote the book, The Opening Price, I got that information, when I was working with John Hill, but there was no electronic trading. Everything opened, and we were trading quarter half. In the stocks, it was bid at a quarter, offered at a half. We didn't trade in decimals or anything like that. And then when the electronic trading came in, and we had these 24-hour markets, so to speak, it changed it a little bit, but the overall idea of it still works. But what you have to do is you have to realize that you have to set the time that you want to look at for the opening. And what I do is I look at the actual opening of the New York Stock Exchange, and in the futures markets, I look at the opening of London, because that's where the futures start. That's 8 o'clock London time. That's 1 in the morning New York time. So that's what I use, and it works. It's an edge, That's basically, like I mentioned before. If you ask yourself the question, if you're below the opening price and you're long, you got a problem, and if you're above the opening price and you're short, you got a problem. That's it can be solved by putting in a stop, but you just got to remember it's better to be in direction of that opening price than against it.
Okay, and I've been doing some little scalps in the T-bonds, and it does look to me, if they do an equal move like they did last time, they'll be going up until about November 1st, and it ought to be a 618 retracement. That would be equal with the last retracement.
That's exactly right. That would take you up to about 150, 2.5 level, and that would be exactly what you're looking for. And if you did it real quietly, that would even be better, because then you have a really good place to go short, because you're in a longer-term downtrend and you're selling into a rally. That's the ideal thing that we like to see.
Yeah. That's what I've been thinking too. Exactly. So,
Great minds think alike. At least one does, and that must be yours.
Yeah. Well, glad to have you back home.
Hey,
and,
we hope to see if you get down into the desert this spring. We really, Sarah and I would love to see you.
Well, we will. I got to come down and collect my $10.
You got it.
Okay.
Hey,
trade you for a smoothie.
Thanks a lot, Marshall. Oh,
right,
you got it. You bet. Bye-bye. Okay, folks, let's move on to the next one that we want to talk about. And that is, someone's asked a question about Apple. and why I'm so bearish on Apple. Folks, the reason why Apple's so bearish is because of that long-term chart that we put. I don't have it right now, but the fact that the Apple has been in a really long bull market for some time, and that's there's multiple 1.618 numbers on that 3 drive. So like Twentyman says, defy human nature. Go look at it yourself. We have a couple of questions in here about the Dodgers. We did know Vin Scully, and I got 2 calls last night from each of my daughters when Vinny was going to throw out the ball, and they were saying that we had got to go to dinner with Vin and a couple other Dodgers once, and he's such a nice guy. I got to know him well. He used to go to Schwab's in Pacific Palisades, the pharmacy, and they had hamburgers and milkshakes, and that's what Vinny liked to do. And I knew that he hung out there because my good friend Wes Parker, who played for the Dodgers, told me that, and so I got to meet him. And Jerry West would always also from the Lakers would also hang out there. So it was really a lot of fun. But we had so much fun with those. My kids went to school with those Dodgers kids, so it was like a big family thing. It was really a lot of fun, and just seeing my kids now that they're older, remembering that. I mean, they don't. My daughter, when she was 8 years old, we were in Hawaii, and I used to go for a walk every morning, and so I got up to go for a walk. She wanted to go with me, so it's 6 o'clock in the morning. We're going for a walk, and we're walking through the lobby of the hotel, and I can't find her, and I called out to her, and she says, "Dad, I'm over here." And I looked over by the elevator. There was all kinds of reporters and everything, and so there was a lines, and I don't know who was there or anything. Well, I found out in just a minute. The elevator opened up, and the Queen of England walked out, and Prince Philip. And she walked over and shook my daughter's hand and patted her on the head, and they took a picture of her that was in the paper. And my daughter doesn't remember that. She remembers the picture, but she doesn't remember the meeting the Queen of England, for heaven's sakes. Hello. Well, that shows you how much the Dodgers mean to her. Anyway, we'll see what's going on here. Oh, yeah, the beans, yes, the beans, meal, all that stuff is right on those numbers that we looked at. It was a perfect ABCD pattern yesterday, and that should be some good support there, especially in the meal at the 13 level. The let me see, was it 9? Whatever that number is in the meal is. Yeah, Andy Messerschmidt. You people don't realize this. Do you know why Andy Messerschmidt was so important to baseball? Peak D. He was the one. No, Andy Messerschmidt was the first one to break the salary thing. In other words, where you could be a free agent. He was the very first free agent, and that's what that's what really meant the whole thing, and that's what changed all these salaries. I mean, used to be, Willie Mays made $150,000 at his top. Now a guy hitting 223 is making $2.5 million. I mean, give me a break. And this guy Bryce Harper is supposed to get a contract for $500 million. Can you believe that? $400 or $500 million? Hello. Shut the front door and raise the rent. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to take a look here at Apple here on a long-term weekly chart. This is why I'm so bearish, the Apple folks. You don't see one as perfect as this very often. Well, you do, but look at Apple. I mean, from over the last 6 to 7 years, we've made two 1.618 expansions, and right at the exact number, 165 per share. I think the high was 165.43. But if you'll notice the legs of the BC swings from 2012, 2013, and the last one we had during 2015, both of those legs were exactly equal. Here again, you're looking at a market that's reacting just exactly technically like it perfectly should have. Now, if these markets didn't react that way, these things would look very random, and they don't look random. If you study them closely, it's far from being random. I mean, they're just, real easy to well, it's never easy, but it's anyway. But let's just look at Apple, move it up just on a daily just to see what's happened since that top came in. You see it broke down to just a little below the 61% retracement there at 149. We rallied up, but look, and then we had the big gap down from 161. Down to the 155 level. Now, look what's happened over the last 5 days, folks, when the stock market has been going straight up. Apple can barely make a rally of $2, can even rally $3 a share over the last 5 days, and that's with good news coming out. So this is why the Apple does not look bullish in my opinion. However, like we've always said here, opinions are like armpits. Anyway, keep an eye on this one, because this could have a really big move to the downside. And it's a great company. It has lots of money, but it had the same thing if you went, look at it back in 2011 when it made the big ABCD pattern there. That's the same type of thing that you want to keep in mind, that's what's been going on. Now, I want to switch gears for just a second here to talk about one of these currencies that we've been watching for quite some time, and that's the Japanese yen versus the U.S. dollar. This is the chart from Friday. We were showing this level here of the 114.20 level, how important it was. Folks, it hit it twice. It broke 100 pips each time. So that's telling you that 114.20 level in the Japanese yen versus US dollar is extremely important. That should be a major resistance level, and if it gets above it, it'll become support, and you could see one heck of a move in the dollar yen. But right now, it is against that tremendous resistance that you have to be worried about. Now, we've had a break here in the euro of about 60 pips here since our last commercial break, and we're getting really close to that level that we're watching to be a buyer, and that's down around, let's just get this exact number up here if we can. Let's see, I think we're looking at just a little below the 117 level. Oh, bear with me one second, folks. Now I got four frogs in my throat. Okay, the number is, and open the envelope, please. It's 116.95. So we're about 30 pips away. We've now taken out the lows of the 18th, and we've taken out the lows of the 23rd. That's what you'd like to see. Now, gold hasn't done it yet, but it's still moving down now, so we'll watch these numbers real closely. I still think you have to respect this 116. And there's some magical numbers of even numbers. 1 second. I'm not sure I'm going to be able to do that show tomorrow. Let's just, hopefully I'll feel a little better here. 116, the actual number, let me write it down for you here. In the euro, watch this number, it's 116.95. That's 32 pips from where we're trading right now. Watch that very closely, and if we get this really sharp break in the gold, breaking out the 1270 level down to 1268, that would be an area you might want to look at. But watch the euro. The euro is by far the biggest market that we trade. I mean, it's thousands of times bigger than anything else, and that's why it's so very important. So that's the key thing to watch today. I think, at least from my perspective, kind of watch that. Another one that's interesting to watch from a tradable standpoint is to watch the Treasury bonds at the 150. 29 level. That's about 5 pips from where we are right now. That'll be a 61% retracement of the move off of the 150.14. That should be really strong support. You don't have to risk more than about 12 to 15 pips at that point. So that's another one that looks really interesting, from that spot. So let's move on to the crude oil. Crude oil is doing nothing. We're still trading at 52.13. I think we're going to try to test that 53 level. And if we take it out with a lot of power and we close above $53 a barrel in the crude, then I would say you've got something that you can hang your hat on, and it could go, up into that 55 level per barrel. But I think it's going to have a lot of difficulty in that. But we'll have to wait and see if that is going to be the case. So that's my 2 cents worth on those. So we'll see what's happening. As far as the grains, I think we're in an area where we got to be looking to be a buyer. The wheat has held up relatively well. We had about a 17-cent rally in wheat, and it stopped, right pretty much. Well, 17 happens to be 1/2 the harmonic number in wheat. That's probably the reason. And so watch the pullback in wheat. If we in the Christmas wheat, if we get a pullback down into this level of 430, that's down about up nickel lower, you might want to watch that. But that's secondary to some of these other things. I think the things in the other markets are far more interesting. One other question I might add here about this euro. Folks, this is coming down really hard. I mean, this is these bars that we've had. I'm watching an hourly chart here, and these bars are very vicious. They're 80 point bars, and that's the old falling knife syndrome. So, you can. I'm going to be a buyer there at 110. 110.95. But believe me, I'm going to have a 25 pip stop in there because it might not stop there. So that's that's what I'm watching. So keep a stop in there on some of these things, because when you have these wide bars like we're having now in the euro, that's danger. You don't want to mess with that stuff. That's not good. So that's my 2 cents worth. So 2 cents, 4 cents, 8 cents a dollar. Okay, let's move on. Oh, we've got someone's asking a question here, and the question is. Okay, we got a caller from Spokane, Washington. Bob, are you there?
Yeah. Good morning, Larry. How are you?
Fine. Thanks for waiting. What can I do for you, my friend?
Great. In regards to the corn and soy trade that I waited patiently for a month, and I was wondering if you could explain your philosophy on not these stuff, but all like wheat and DWD7. I was waiting for 420, and the corn I was waiting for 338.
Yep.
Both of which did not get down to that point. They got down within 4 or 5 points. But I was just wondering what your philosophy is on once they do turn, just let's go for the test.
We got to take a break here, Bob, and when we get back, I'll cover that from the break. How's that?
Thank you.
Okay, thanks for calling in. We appreciate it.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking with Bob from Washington, Spokane, Washington, not Washington, D.C., and it was about the wheat and corn trades that we were looking at. We were trying to buy December wheat down there at the 420 level. It only got to 423, and then, of course, it had this, huge rally of just about 20 cents a bushel. And, the question is, how do you prevent that from happening? And you just can't. I mean, you have an idea of this, what it should go to, and if you miss it, you miss it. It happens all the time, so you've got to get used to it. The way I handle it now is that we've had a really good rally here in wheat, so what I would like to do is to watch an hourly chart or even a 15-minute, and watch for a nice ABCD pattern from the low at 423 to the high at 443. Is 20 cents, so 12 cents back would be a 61% retracement. That would take you to around 431. So at 431, you could be a buyer and then not risk more than about 8 cents, $400. So you could be a farmer for $400. But if you could get that Gartley pattern at that ABC level on an hourly or half-hourly chart over the next couple of days, that's what I would look at. Now, this is Thursday. We got tomorrow. So if this pattern shows up on Monday, that would be one that I would really be looking at, because I think that three-drive pattern that we've had in these markets and the fact that they couldn't break right in the middle of the harvesting season is telling us something, very, very significant. And the fact that Minneapolis wheat that we followed, it hit the Fibonacci level at $6 a bushel 7 times. And then it's finally started to rally strongly off that. So that's another reason to think that you might want to be a buyer of wheat here. But I would go to that half-hour chart, which we'll do here over the next day or so. I wrote a little note here, and we'll try to follow it just to see how our overall thinking is regarding trade entries and stuff. So we'll watch it and see how it works out. Live every day in an attitude of gratitude, and may God bless.
Hi, folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.